There we go. Sorry guys. So my computer actually froze. I don't know how that happened. So this is actually part two, and we are going back, man. Nothing can stop me, man. We had so many technical difficulties this morning. Our main desktop for people calling in couldn't work because there was a firewall issue with our network. And then we had to go to my laptop and use my chat. And that couldn't work. But now I'm on my phone, man. I'm telling you, no one can stop me from bringing value to you guys. This is how much I care. So, I still have my laptop open. I'm frozen. I have like the weirdest face that I'm making right now, and I'm just continuing to stare at it. But we went live for 15 minutes before it shut off. I'm going to continue what was said. So, C. Sanchez had a great question about, I have my own money, right? Should I, use my own money or should I get financing? And I was talking along the lines of, if we talk about part one, I don't know if part one's going to get uploaded. If not, I'll go back and I'll actually redo kind of the questions that was said, right? In that live stream that ended up being frozen. But however, so I'm gonna continue on with this thing. So this is actually better for me because it's like I can move around and I'm more mobile. Hopefully you guys won't get too dizzy. But let's go back to the question of C. Sanchez. If there's no other questions in the chat box, I'm looking at the chat here. Let's see. There we go. All right, cool. We got the chat set up. All right. So going back to what C. Sanchez said. So C. Sanchez asked the question of, do I use my own money? Do I use leverage? And, to kind of review, I said that, one of the beauties about real estate investing is that, you could use leverage, right? So you can gain income off a certain value of a building. But in order to obtain that value of a building, in order to obtain that asset, you can use leverage to get there. So I was telling, if you're using seller financing, make sure the terms are good, right? That everything works out for you, that you are hitting your financial goals because you have that leverage. Now, in terms of a bank situation, right? Walk in there, and a lot of times if the banks see that you have high liquidity, then they will give you very favorable terms. If they also see that you're an experienced investor and you know what you're talking about and you're using a lot of verbiage, you know how to underwrite deals and break things down. If they look at your asset sheets, your personal finances, and when banks ask for your personal financial information, just to give you guys a heads up, they will ask for a lot of info. Every year, I submit my personal financial statements to my bank for an apartment complex, a 36-unit apartment complex that I bought a couple of years ago. But they ask for everything. They ask for liquidity. They ask for a total amount of assets, total real estate holdings. They even ask for my life insurance information, what's my policy, like what's my cash value that I have in my whole life. They ask for like any 401k or any health. Like they ask for everything and anything related to personal finances. So just to give you guys a heads up, be prepared to provide that. And again, if you're able to provide that at easy notice and you're able to do so, then they won't give you any problems. Matter of fact, they will actually give you extremely favorable terms. So again, guys, be educated on that. So C. Sanchez, to answer your question, I always say if you're in a position where you could use your own money to leverage it and do seller financing, I say go for it. But at the same time, I'm also not ignorant of the fact that a lot of large companies, a lot of big real estate companies like Berkshire Hathaway and a lot of big real estate funds are actually in the process right now of storing up as much liquidity as they possibly can. Right. So if those guys are doing it, what does that say about us? What does that tell us? What information does that give us? So, always be weary. Again, be weary, guys, of what is happening. Okay, Dave, do you have anything by any chance I could hold the phone like stationary, just so that I'm not holding it with my imperfect human arms?
I don't know about that.
Anyway, as Dave is getting that, let's see if we have any questions. All right, so let me actually go back then and tell you guys and finish kind of the story of how I personally got started, because Again, I do know that this is recorded, so I do want to be able to provide as much content and value to you guys. Oh, what is this? Well, I don't know if this is gonna work.
How about
Oh, this works, yeah.
yeah? Oh, there's this. I don't know if that's any better.
There we go.
Yeah.
I think I'm even. Yeah. All right, cool. So let me talk about how I personally got started, and I'll go ahead and just end the live stream that way, because I don't see too many people online here. I think, again, once that laptop froze, a lot of people kind of just like, what's going on? What's happening? So I'll go ahead and just go off my phone and just kind of share the story, and then we'll go ahead and do the live stream next week, next Monday. So Ibrahim Halidu Garbra, I hope I'm pronouncing your name properly. I'm sorry if I butchered it. But yeah, we do have a mentoring program. So we are releasing our own real estate investing education program. I also do one-on-one coaching. So if you're interested, feel free to go ahead and put in the comment section or reach out to us. Right? Go to the kwakbrothers.com/learn. And there's a lot of information that we do cover in terms of that. So we do offer mentoring programs, so feel free to go ahead and check that out. So I think there was another question asked. What forms do you suggest? Let's see. What forms do you suggest I use to make an offer? So there's a lot of forms that you guys can use to make an offer. Some main forms that come off the top of my head when I'm underwriting deals and I'm actually analyzing deals is three things. What's called a T12 report. So a T12 stands for a trailing 12-month financial report. So that's going to basically talk about your income and expenses when it comes to the last 12 months of that particular property. You get that from a property manager, or if they're self-managing, from a seller. Now, if you guys are going after a large apartment complex or like even a 4-unit, or whenever you're going after a property that is most likely going to be managed by a third-party management company, the management company, if they are competent, can provide you with a T12. And if they're using a software like Appfolio or Buildium, they should be able to provide that with one click. Now, if you are talking with the individual who manages their own properties, most individuals, so my girlfriend manages her own property. So my girlfriend Lisa owns a 4-unit. She manages it on her own, which I think is the best option for her. And I tell people all the time, like if you have like 12 units or less, manage it on your own, right? Like if the circumstances are to the point where like you're like a doctor or and you really need somebody to manage it for you, in that case, pick and choose what people can do for you, right? So I know like the biggest thing is bookkeeping. So like hire out third-party bookkeepers. Hire out third-party this, and that, but a lot of managers upcharge, and I'm not a big fan of that. So, what forms do I suggest? T12. Managing yourself, most investors do it on like an Excel sheet, right? So my girlfriend uses literally like Google Sheets to do her income and expense, right? That she just gives off to her accountant every single year. So T12 is one. A Schedule E or Form 8825 is key. So this is the official tax return for all income, excuse me, all income and all expenses with any investment property. If the individual has it under their own name, it is most likely going to be a Schedule E. Now, if they have it under an LLC or an S corporation, they will have what's called a Form 8825. So a Form 8825 and a Schedule E is literally the same thing. They're both tax forms that you provide to the IRS that shows your income and your expense. The only difference is literally it just depends on what you hold the property under. So if you hold it under an S corp or an LLC, then it's a Form 8825. If you hold it under your own personal name, then it's going to be your Schedule E. So that's the second form. Another form that I would ask for is either any type of inspection report. So here's the main point that I'm trying to get at. So the main point I'm trying to get at is you're looking for any type of document that's going to give you information based on whether or not how much maintenance you're going to need that first year. So I always say the worst maintenance year is always your first, right? That's always always, right? Every single one of my properties that I own, and I have properties I've owned now for 4 years, right? 3-4 years may not be a lot, but based on my experiences with talking to other individuals and networking, every single one of them is like, yep, that first year is always the most costly, right? That first year, there's always, something that the seller does not tell you about that you're going to have to fix, or a tenant recognizes that it's under new management, therefore they're going to try and tell management office, hey, like this needs fixed, that needs fixed, or the wind blew the wrong way and the window needs to be corrected at a 98-degree angle. There's always something that's going to come up. So I always say look for documents that, and thank you for the question, right? I always look for documents that tell you anything about maintenance. So if you guys notice that every single document that I've laid out, it's always about protecting your downside. And even your Form 8825 or your Schedule E, I'm always looking more at the expenses. I know the income. I know what the income's going to be. I know the market rent. I've done my market research enough to the point where I know what I should be getting in rent for that particular building. What I'm interested in is looking at the downside. What are the expenses? What are the things that I need to look out for? Right? Those are the things that are going to make or break a deal. So whether it's an inspection report, another form that you can ask for is any forms based on environmental agencies. So like the EPA or the IEPA, in my case, the Illinois Environmental Protection Agency, or your local state's EPA, because a lot of people miss out, right? A lot of people don't, they forget that there's also a state Environmental Protection Agency, not more than just a federal. So always look out for that as well, because a lot of times the EPA can be in cahoots with your local state department, or like your local state, your city. And that's always a pain, having to deal with the city, having to deal with the state, which again, if you do a good enough job and you're watching our live streams and you're watching our videos, then you shouldn't have any problem. So again, ask for either any type of inspection report, any type of environmental documents that say that you're good on this, good on that, right? Like I know lead is a huge thing, like lead paint. That's something that I dealt with in the past. So any type of forms that talk about maintenance, inspection, condition of the property, code, that's also vital as well. So whether it's a city inspection, whether it's a third-party inspection, that's always key. All right, we got another question. Let's see. So Rob asked, is it okay to ask the owner/agent for current mortgage amount, if any? Yeah, so that actually would make sense, because one of my favorite ways to acquire buildings is what's called a subject to transaction. So a subject to transaction, for those of you guys that don't know, it means subject to the existing mortgage, right? That's basically what it means, right? I'm sorry. Yeah, I'm trying to adjust the camera here. You know what? Maybe I should just hold it. There we go. Look at me. I'm like Ty Lopez, walking around with my hand, right? So actually, I kind of want to stand up, get the blood flow going. So, okay. So going back to the question. So the question was, is it okay to ask for a mortgage amount, if any? Absolutely, right? That's actually one of the questions that I commonly ask to my sellers. Again, the main reason is because I'm trying to get as much information about them as possible. The more information I have about them, the more value I can bring to the table, which means what? The more money I can make, right? So I asked them, hey, like, what is this? What is that? And again, going back to subject to, that means subject to the existing mortgage. So subject to is an acquisition strategy in which you take over, right, either by title exchange or by not, because you can actually buy it on contract, by taking over the person's existing mortgage. So a lot of times this happens because the individual is in a situation where they need to get out, and they need to get out quick, right? So I'm doing one right now. I'm buying a rather large portfolio of about, I think like 200 properties, somewhere near there. But phase one is 48 properties, and we're buying it subject to. We're just taking over the individual's existing mortgage. The video is breaking down when you. Okay, sorry guys. Here, let me try and do this then. Let me try to sit back down and yeah. Again, guys. I apologize for the technical difficulties this morning, but whatever it takes for me to get these questions answered, I'll do it. So again, I hope this is straight. But anyway, it doesn't matter at this point. I'm sure you guys just want it stationary. All right. So subject to, you're basically taking over the existing mortgage. So a lot of times, yeah, I do ask how much do they owe on it. because if I can create a situation where I can either take over the existing mortgage and I can still cash flow and I can still get what I'm looking for, right? Then that's awesome, right? But at the same time, on the other hand, if I could potentially acquire the building on seller financing and still have my payments match his payments, or perhaps even a little bit more, now I know what I'm working with, right? Now I know what areas I could add value, what areas I could really hit to be able to get the deal done, right? So let's see, another question asked, I want to make an offer on a home that doesn't have a realtor. What forms can I use to make the owner the offer? Yeah, so in that case, just use a standard REPC, right? A real estate purchase contract. Now, the reason why I say that is because I always say have an attorney. Um, I don't care if you're buying a single family house. I don't care if you're buying an investment property. I don't care if, especially if you're buying a 300 unit portfolio. Always, always have an attorney. Guys, I've met people who try and nickel and dime every little piece of their real estate investing process to try and save a little bit of money. Guys, I'm telling you, it is worth it to hire a real estate attorney, especially a good one, because not only can they do stuff like title search and prepare documents, it is worth it, right? And if you have even if you have a good real estate investing, a real estate attorney or real estate investing attorney, they should be charging between like 250 to 500 bucks, right? So my real estate attorney charges me $500, right? That's because he's a really good one, really, really good one. So yeah, I always say get an attorney, have an attorney that is going to run through your closing documents. So that's always key. Do not miss out on that. Let me see. All right, Rob. Okay, so there was a question. How much time should I wait between? I don't know what you're waiting in between of. So if you want to clarify that for me, that'd be great. Rob said, thank you. Thank you, Rob. Thanks for pointing that out. I wouldn't have known that the video breaks down when I move unless you would have put it in. So thank you. Appreciate that. And that has educated me, right, in how I should position my phone. All right, Las Vegas Legacy Homes. Getting an AIO loan on your primary and a HELOC on our rental. We have a $600,000 equity on our primary, $250,000 equity on your rental. First off, congratulations on having that much equity. An AIO loan. Man, I don't know if I've ever heard that before. Maybe I'm just not educated on what an AIO loan really means. So Las Vegas Legacy Homes, if you want to tell me what AIO stands for, I can certainly tell you what that's going to do. But in terms of pulling out equity, pulling out a line of credit, I say right now, especially while the financing is good, right? So there's a southern saying. I got a friend that lives in Arkansas that I went to college with, and he always told me, Danny, you got to get while the getting's good, right? And now, granted, he meant that referring to females, but it also does refer to life as well. So right now we are in an economy, we are in a market where banks has eased up on lending, granted, but we are still in a position where money is still relatively cheap. So I say if you have a position where you're able to take out a line of credit based on the equity you have in your home, do it. Do it. Just Nike. I wish I was wearing Nike right now to show you. I'm wearing Adidas sneakers. Just do it. Right? Do it right now. Do it. Right? Yeah, I say because right now, especially when money's cheap and banks are able to do so. If you have, if you need someone to fund you, right? All in one. I'm sorry, man. I knew what that is. I know exactly. It's because we make videos on it, right? So I should. Man, my mind completely blanked, right? It's probably all the technical difficulties we're experiencing. Okay, yeah, but yeah, I say do it. Right? Especially because, we are obviously very familiar with the all-in-one loan here at the Kwak Brothers HQ. But whenever you have an opportunity to take out a line of credit against the equity of your home, especially if it's collateralized against the equity of your home, I say do it. Especially because, especially if it's fixed rate. And I say just do it just to have it, right? I'm not saying use it, right? Because using it is a whole different topic. That's a whole different conversation based on the deal, based on, right, what your financial situation is, right, based on whatever, based on a lot of different tangibles and factors and a lot of different things. But I say whenever you have an opportunity to get a line of credit and get a lot of it right now, I say do it because you're going to always have that available to you, right? So I always say do it, and because you could use it 2 years from now, 3 years from now. Again, depends on your bank, it depends on where you get it from, but I always say do it. Chris B asks, hi, I have a primary home and I want to pull HELOC on it to buy an investment property. What is the best approach doing this? Alrighty, so the best approach would be, and again, it depends on what the terms on your HELOC is, how much that HELOC is going to cost you. And I say at that point, treat your HELOC like an investor. So if an investor wants a 12% annualized return, right, that's going to be the same as having a HELOC that is on 12% simple interest, right? You're going to have to make that payment every single year on an annualized basis or on a quarterly basis or on a monthly basis. Depends on what type of HELOC you have. So the best approach, again, is to just treat that HELOC like it's an investor. Don't treat it like it's liquid. Don't treat it like it's liquid cash. I've seen that mistake being made where I've seen investors treat HELOCs and lines of credit as if it's cash, and they've kind of used that as an excuse to over leverage themselves and get into a bind where it's not that as beneficial. So I say treat it like an investor. Treat it like your own, even if it's your own HELOC. Treat it like it's its own separate entity, and it's lending on your deal. That's going to allow you to put you in a frame of mind. Because again, it depends, right? You could have a knockdown deal where you're cash flowing $9,000 a month and it's only like a 10-unit building, right? You may have that, right? You may have a scenario where, the seller just needs to get out and he wants to sell it for what he owes on it. And he owned it for 20 years and he's got a 30-year loan, and you're able to go on under and take it, right? That may be the case, right? But always just treat it as an investor, treat it like it's a separate entity. All right, Las Vegas Legacy Homes. Thank you, Las Vegas Legacy Homes, for all these great questions. The question is oopsie daisy, how much time do I need to wait between doing an AIO on our primary and a HELOC on our rental? So in that case, I would, because it again depends on. I hate to use the word it depends, but it really does. But again, depends on who you're going through, what banks. Right, I know that in terms of like inquiries on your credit report, regards to your credit, and again, guys, I'm not a credit expert, but I do have a couple friends that are credit experts that I've spent a good time asking questions and learning. So I'm just literally just transferring the information. I know there's a certain time that's needed. I know a lot of banks use 90 days. That's a common thing that goes around the industry in terms of financing and funding. Now, if you if you want to get connected to one of my friends that is an expert in funding, because it sounds like Las Vegas Legacy Homes that you have right now $180,000 of equity that you want to be able to use, that you want to be able to utilize to buy real estate investing properties. If that's the case, I'll hook you up with one of my friends. Feel free to, I don't know what I should do here. Do me a favor, comment down your email right now, and I will email you personally and connect you with one of my buddies, right? I will do that for you. Before I go to lunch, I will do that for you. I will take 15 seconds just for you to email you. Follow-up question, if I treat it as an investor, would it be beneficial to open an LLC or S Corp against it? What do you do now, or how is your entity set? All right, so interestingly enough, I actually just had a sit down with my CPA and tax and legal expert yesterday. So what I meant by treat it as a separate entity is treat it like if its own investor, right? So you have your line of credit right now, right? You have your HELOC right now. Treat it like if it's a different person, right? So for me, I was referring more to what you think of it right here, how you treat it, rather than its own like legal entity, right? Now, I always say that if you're trying to do real estate deals and you're doing a lot and you're doing high volume, which, if you're on this channel, if you're on this live stream, that's what it does. I always say start off with a single member LLC or a sole prop. There's never a negative thing. I use LLCs, right? Like starting a fresh LLC, or in Illinois we have series LLCs, and I know that's a common thing for Many states, series LLC. But I typically have my main LLC, which is, Noble Properties LLC. And then I have a lot of series LLCs under that own different one of my projects. And again, a lot of that is for asset protection. Um, and obviously doing things the right way, so to speak, and also tax advantages. There's a lot. I've got a lot of advantages to having entities set up the right way. So how is my entity set up? So I typically have what's called an S corporation that has different equitable interest in different LLCs. So that's how we do it. So we have an umbrella S corporation that owns LLCs, and those LLCs have series LLCs that own different projects. So thanks for the question. That's something that I never really talk about. So do you have a threshold in your mind when I should convert over to an LLC or S corp? Yeah, I say it's there's you could take it from a lot of different standpoints. From a tax standpoint, you should go with a sole prop right away, right? You should have a sole prop or a single member LLC from the get-go, right? I also know from a business credit standpoint, that's also very beneficial for you to have an entity as early as you possibly can and get that D&B number and apply for those trade lines and trade accounts. I know that's beneficial, absolutely beneficial. I also know that's beneficial for when it comes to funding. How old is the corporation or how old is the entity? I know that also comes into play. So based on what I know and the context of this conversation right now, I would say get it ASAP, right? There's no harm in that. Thanks for the question, Rob. I really appreciate that. Or I'm sorry, Chris. Chris was the one that asked the question. Thanks for the question. Yeah, that's awesome. All right, guys, if you guys don't have any more questions, it is currently 11:54 my time, and I am starving. I'm gonna go get some Korean food. But again, if you guys have questions, feel free to ask right now. Do you have a property management LLC if you self-manage your property in your series umbrella? Yeah, I always say yes, but I always that's tough, right? If you're asking, do I create a separate entity for my management? If I were to manage myself, I would say no, because one of the tricks that I've learned from one of my sellers actually is I remember I was reading a Form 8825, which again is the tax form for income and expenses, and I noticed that his management was literally 50% of his gross income, and the income was, boy, let me try. So the gross was 274, and again, it's gonna be a hard time to remember because this was like one of my earliest acquisitions, and it was an apartment complex. It was like 3 12-unit buildings. So the gross was 274, and his management expense was $87,000. And I scratched my head at that, and I was like, "What's going on here?" So apparently, the guy self-manages. He owns his own management company. So he's got an office for his management services and he's got employees and everything. What he does is that the LLC that owns the building is also the management company that he holds, for the LLC, right? So the LLC, right, just to clear things up, owns both the management company and the apartment complex. What this guy was doing was to increase the expenses on the Schedule E to obviously get more tax advantages. He actually would cash flow. He would collect half of his cash flow through his management company and the other cash flow through just regular traditional means of collecting cash flow. So he cash flowed a total of about $160,000. That was the net operating income on that building, was $160,000, which sounds about right. But half of it he would collect through his management company, and the other half he would collect through his normal self. What that does is that decreases the amount of income that you get through one avenue, which means what? Tax brackets, right? Tax advantages. You don't have to, right? You're not reaching that tax threshold. There's a lot of benefits to that. So instead of collecting $160,000 through one stream of income, he divided it by putting $87,000 and collecting it through his management company, and the other, 80 something thousand through his traditional way of collecting cash flow. That allowed him to actually decrease his the amount that he had to pay in taxes. It allowed him to keep more of what he made. So yeah, great question. Another one. Chris B asked, one more question before you go do eat. Where can I get more information from where you guys to really get started and how to structure offers for, oopsie daisy, didn't mean to do that. How to structure the offers for either single family home or multi-units. So yeah, Chris, thanks for the question. So we actually offer coaching and when I coach, right now I'm only taking like 25 clients for the entire year, and I'm already up to like I think 9 or 10, and we only really started offering it like 3 months ago, I think. So I'm only basically taking on only like 10, 15 clients for the rest of the year, right? Because again, my time, I'm right now I'm trying to start a 506B, or I'm sorry, a 506C capital fund. So it's a lot of time has been going, and plus I'm working on a rather large acquisition. I think it's again, so phase one's 48 properties, and the whole portfolio is probably going to be around like 400 units. So that has taken up a lot of my time, having to fly back and forth from Chicago to where I'm investing in. But if you're interested, again, feel free to either comment down your email in this live chat and I'll email you personally, or you can check out thekwakbrothers.com/learn, and you'll be able to find information on our coaching. So yeah, absolutely. So yeah, absolutely. We do offer coaching, and I'll be more than happy to help you. All right. Any advice? I have an 810. Oopsie. Let's go back. I have an 810 FICO and 122,000 equity in primary home, but was denied a HELOC. Oh boy. All right. So you should go. You should come back on Wednesday, where Sam actually does a live Q&A for our HELOC stuff. Rob, do need to form a Delaware holding company? No. I'm gonna stop you right there because I know there's a lot of real estate investing education companies that tell people to get either a Nevada corporation or Delaware corporation. Guys, you talk to any CPA. I'm not talking about the ones that get paid behind closed doors to endorse it. But if you talk to Steve Hamilton, if you talk to Mark Kohler, which we've had on our show, they will both tell you that is the most idiotic thing that you could possibly do. Most likely they are in cahoots with somebody else, right? That is the worst thing that you could possibly do. Get a Delaware corp. No, that's absolutely. I'm not going to get more into it because it's going to make me upset. But the answer is no, right? Please do not do that. Chris B, we'll do things. Yeah, absolutely. Right. So go to thekwakbrothers.com/learn, or again, if you want to type in your email in the chat box, I will reach out to you personally on our coaching. And I like reaching out personally just because I'm able to network with individuals, and for me, I love networking as much as I possibly can. So plus I love you guys, right? You guys are subscribing to our channel. Man, I want to take care of you. You know, you guys are spending time with me. I'm spending time with you. This is beautiful. It's a beautiful thing. All right, guys. So it's 12 o'clock right now. Again, if you don't have any other questions, feel free to hit me up, right? Subscribe to this channel. Mark Kohler didn't say not to. So yeah, Mark Kohler. So I actually know Mark Kohler personally. Mark's actually a very good friend of mine, and I've actually been to 7 of his live events, and I can literally call him right now and tell you that he will not endorse getting a Nevada corporation or a Delaware corporation unless that's the state you're doing business in. If that's the state you're doing business in, then yes, file for that state. But if you're not, if your business literally has no relation, right, to that state that you are being told to file in, then don't do it, right? What's the point, right? If you're not anywhere near that state, then don't do it, right? But if you're doing business in that state, then yeah, absolutely go for it, right? If there's any tax advantages that bring it, then yeah, absolutely, right? But I've been told by multiple people that are considered experts in the tax and legal field. And again, guys, I'm not a CPA, I'm not an accountant, right? I surely may be wrong here, right? But from what I've heard and the reasoning behind that, I've been told that, you know, unless you're doing business in that state, then you shouldn't do that. Are you coming back after lunch to continue? I don't know. Maybe I should. But next Monday again, we'll figure this out, right? We'll have it to where you guys can actually call in, right? And to make it up, next Monday I'll tack on an extra 30 minutes, right? So we'll go from 11 o'clock Central Time to 12:30. Right? You hear that, Sam? Right? We'll go to 12:30 next time because of our technical difficulties. And you guys stuck around. I really applaud you guys. Thank you guys so much for your guys' support. You've given me a lot of great questions for me to think about. And now my wheels are turning, right? So next week, next Monday, we'll go from 11 o'clock to 12:30. But again, guys, much love to you. Thank you for hanging out with me. This is always a pleasure, masterminding and spending time with you guys. I'll see you guys next Monday, and peace out.